see that what's going to happen next is that this is now taking advantage of the fact the probability is now sell side, and now they're gaming liquidity at top edges. So we don't see 4, we see, for example, the 6. And when we see the full 6, that's when you see the max shading in the whole area there. And obviously at that stage, we now suggest that that's it. The chances are that the market has a very high probability of failing at this current high here. And sometimes that results in that type of narrative. So 1 is not a change in probabilities. Well, it is. It's a slight improvement, but it's not enough to turn the market. 3, balanced markets. 4, top edge markets. 5s and 6s, probable trades. Okay? So that's what we start looking for when we see these elements. So you can see if we look back at the max trigger, you can see that we only have 2 here. So that's not even a balanced market. We have 3 here. That's only a balanced market, and you can see the price rallied on that balanced market. Then we drop back to 1s. Well, that's still a bearish market. 1 green is a bearish market. 2 greens is a bearish market, and then we get that squeeze. Do you see that? 2 greens is a bearish market. It's like 2 reds here. It's still a bullish market. 1 red is still a bullish market. You know, it doesn't change. It's just not as bullish. So when you don't see anything, of course, if the market's falling and you don't see anything, you just simply go with the flow. You just keep selling it, right? You just keep selling it. And that's obviously what you start seeing. You start seeing these empty areas as the market drops. All you should be doing is selling into that dropping phase. And then obviously when we get the big drop here, you can see we actually go to the 4 level. Well, 4 means exactly what we showed you on that diagram just there, didn't we? 4 means that the edge is now possibly tradable if you've got other evidence. So when we get 4, you can see that that's when we start looking for that. We put 4 into what's called a offer watch or a bid watch, okay? So 4 is like when we start going into offer watch up here. Yes, does that make sense? And obviously when we get offer watch and it changes from 4 to 5 or 4 to 6, we're probably in shape for a good sell at that stage. Well, when we got 4 on that down candle, we're now on bid watch, okay? So at that price there, we move to bid watch. And obviously what happens is we start watching this area for bids. We start watching this area for reversals. We start watching this area for transitions, book changes. And we simply try and take advantage of it if we see it. We haven't got the max signal. So obviously we know it could be very early to the party. So we're obviously careful. But if we're going to do anything, we should be buying. That's the one thing that 4 tells us. If we're going to do anything, we should be buying. Anything less than 4. During this whole phase here, anything less than 4 would be a sell. I'm not going to sell into 2 greens. I'm going to sell into areas where there are no greens or reds, so long as the market's on a downtick and the price is pulling back. That makes life dead easy for me. Because obviously on a pullback, the chances are I'm not going to get any greens. So obviously I've got nothing to worry about. I can simply sell at higher prices. So for example, during this pullback here, I didn't get any greens coming in during this move here. So that makes life very, very easy. At the moment, we're going to be squeezing the lower prices. We're going to be squeezing that to the downside. And that's where we get the squeeze. We've already told you in an earlier conversation that we expected the cash open to do what? Probably try and run the 40-70 bottom edge into the cash market open to get liquidity for the big commercials to play. So that's what seems to still be happening. Because Max simply not interested in this current low. Simply not interested. Look, nothing into the bottom edges. Nothing. Second bottom column, guys. Second column, second bottom row. That's where we would expect to see Max taking part in the trade. But at the moment, the edge changes to bullish here, and that's obviously given us a bit of a buy side lift. It's only bid watch. It's not a buy. It's a bid watch. We start watching for order flow transitions. And if we like what we're seeing, we can step in to the marketplace. Make sense? Yep. All things that make sense. Gene? Yep. It should make sense, guys. It should make sense because it's the process. Remember, you're trying to overcome the momentum, the algorithm's momentum. The algorithm is still selling when we get one green, still selling when we get two greens, but starting to get perhaps jammed with a bit of activity. Might still be selling when we get three greens, unless one of those greens, of course, is the max signal at the bottom edge. If we get the max signal at the bottom edge and we've got three greens, forget about the algorithms making any money. We're just going to bust them in the face a few times and make them think about it twice. Well, it's the thing that we set out, Sebastian, long time ago in a galaxy far, far away. When we set out to do this project, we were obviously going to be limited because we can only use what you guys have got access to. We can't use institutional tools that we've got access to. So we're kind of limited about what we could accomplish. And anytime we tried to accomplish anything, we simply found that the retail systems couldn't cope. The Ninja Trader Sierra charts simply couldn't cope with the trade. Slippage was horrendous, and we had to go back to the drawing board probably about at least 100 times over that period. So it was a real struggle, but because what we're trying to do is we're trying to get an algorithm that makes sense to what we teach in the classroom. Because obviously if the algorithm bears no relation to what we teach, people must be saying, well, what the hell am I learning here? Because into that bottom edge, all I could see was sell opportunities. I couldn't see any viable trade. So why the hell have you got an algorithm that just bought it in these areas? So the algorithm has to conform exactly to what we teach. Otherwise, well, what we teach is just a lie. It wouldn't make any sense, right? So what we teach has to be part and parcel of this algorithm. And obviously, if it's part and parcel of the algorithm, well, good, because we're now in good shape, right? We can start to explain, and people can see it without even having the algorithm. And that's always the objective, is to see it without having the algorithm. So you don't technically need the algorithm itself, but it is what it is. It's an assistant to your own trading. And if it's an assistant, it should be, it's like having a civil servant that completely disagrees with every policy. All you do is you find yourself banging your head off a brick wall with these guys. So it should lean on the information that we teach. And that's what it does do. It leans on the information we teach. And you can see that little buy trade's done well. It's came off the bottom edge quite nicely. It's came back up into the bracket area here. It's kind of getting jammed up here. The first red candle came in. And obviously the first red alert, obviously that means it's probably going to start slowing down at that price. So we know that that's a possible profit take at that point, because we started to generate a single red. As the price goes higher, it will start generating two reds. As the price goes higher still, it will start generating three reds. When it generates three reds, what's going to happen? The price will start balancing around an area. When it goes into four reds, it's not just a balance, a sweep will start getting us selling. When it goes into five reds, we simply won't just be waiting for a sweep to sell. We'll be selling pretty much any time we get an opportunity. Hits the six reds, we're ready to really trade limits and markets. Limits and markets. Do institutions do better on the slippage part? No, they do 10 times worse. But because if they tried it, they would lose so much. A lot of them just simply don't take part. They simply don't take part in the slippage part of the trade. So their job is to get the buys on the downticks and the sells on the upticks. But algorithms, the momentum algorithms rely on the slippage because they cause the slippage. The more buying they can put in at higher prices, assuming that the value is good for them, the bigger the chance that the market maker will do exactly what we teach in the Monday Club. Market maker will just simply pull their liquidity. And that's why we see that storyline of liquidity so perfectly illustrated every time we look at the withdrawal, the migration of liquidity, isn't it? That storyline just simply is incredibly powerful. And yet a lot of people just simply don't see it or don't pay much heed to it. Yet it's an incredibly powerful storyline. If you get your liquidity story right, incredible things happen as well, don't they? You start to see it So you can see, for example, on the likes of the Japanese yen, just for no other reason as it's the chart I've got up at the moment, you can see when the market maker starts pulling away that liquidity here, the migration of liquidity is very strongly offered and very weakly bid. Well, all you should be doing during those periods is what? Selling, right? So you get a buyer coming in there and you say, brilliant, let me get a sell against that guy. That guy's an idiot. So you sell against that guy up there and you say, right, get me into some sales. And sure enough, you make some easy cash. It's the Monday Club trade all over again. So this idea of the liquidity migration does what we've just been discussing. If the market makers recognize an institutional seller at the top edge, and that institutional seller wants to sell in the downtick, the market maker, which is now the pink candles, the market maker pulls away their liquidity so that if they want to sell at lower prices, they're going to sell at very, very much lower prices. But that doesn't get the commercials selling at lower prices. It gets the momentum algorithm selling at lower prices, because they know that if they sell at lower prices, the market maker is on a pull at the bottom edge. So they know they're bound to guarantee themselves a very, very nice, easy money profit. Does that make sense? So at the top edge, the commercials have a way of disguising by holding. So at the top edge, so here's how it works, guys. Here's how it works. Okay, so this is one of the first classes we ever teach in terms of a market structure, of course, and it's this structure narrative here. So this is the basic structure of all markets here in essence. And we can understand the structure because obviously if we were to do this as a green light, red light narrative, what would be happening here? Probably one green light, two green lights. Sorry, green lights, and I'm drawing red. Brilliant. 4 red lights. One would imagine, if it's perfect, 5 red lights, and if it's even more than perfect, oops, a big red light. My God, Ray, how to make an easy task difficult, eh? 6 red lights. So you can see that this is like the max system here. This is how the max system would work right here. So obviously when we reach that, I know we've dropped up past the 3 green lights situation, so we'll just pop the 3 in here so that we've got the full sequence. Okay, there's the 3 right there. So obviously when we reach 3, that's when the market starts to become what's called a balanced market. When we reach 4, we start thinking about offer watch. When we reach 5, we're offering, and when we reach 6, we're not just offering, we're chasing. Okay, so the market maker is not going to, the commercial is not going to chase any of this until we get to the final phases. So what the liquidity provider's doing, the market maker is doing, is they'll be adding bids still into that market, right? They'll be adding bids into that market. So they'll still be adding bids, and then when this happens here, they'll kind of pause their bids, won't they? They'll kind of do a little bit of holding, and they'll start adding a little bit of offers in here now, won't they? They'll start adding a little bit of offer liquidity as well at higher prices, and they'll be looking to try and extend this range a little bit here. So the market makers will be just kind of holding this as a storyline. Do you get it? But obviously when we start moving into this, this changes here. This changes here. This guy says, oh, wait a second. I am not interested anymore. And he starts doing this with the bids. And when you start doing that with the bids, what happens to the color of your migration candles? The color of your migration candles obviously change. The color of your migration candles at that stage here start turning pink, because now there's a liquidity migration going on. And obviously with that liquidity migration going on, the algorithms up to this point have all been bullish, haven't they? The algorithms, if we have to draw in the HFTs have all been bullish, of course, as we trade this phase here. And then when they see this balance phase, the HFTs, might still buy into it, but they'll be aware that when they get into this area here, they're starting to get maybe jammed aggressively. And what happens is the HFT just switches off. The buying is now finished. The transfer to weak holding buyers has now completed, right? And now what's going to happen is the HFTs are waiting. And then when we get the migration coming in, now the HFTs are now going to join that migration, and the HFTs will now be aggressively selling on these downticks. And that's when you want the slippage, because you're already heavy short, right? So the institutions want to see a lot of slippage through this phase, because obviously through this phase, it's all the old Momo HFT algorithms that are all kicking into gear to get that momentum moving. So we've obviously got that Momo HFT, which is usually based around the prop desks or the HFT desks. There's always the algorithmic trading strategy desks. So we get that trade narrative kicking off, and obviously we get the commercial accumulation, which is this phase here. So we get the commercial accumulation phase through that phase there. Makes a lot of sense, doesn't it? Makes a lot of sense. Cash market open. Woohoo! Max sold it.